FEOC is foreign entity of concern. Some countries like China, North Korea, Russia, and Iran, the companies related with those countries, and even the individuals invested in other countries from those countries. I mean, if a Chinese investor invested glass factory in Malaysia, it's it's a non-FEOC product. So it should be non-FEOC product and non-FEOC investment, even if it's a third-party country.
The sooner that we can get real verification of FEOC compliance, the better, right? Because I think a lot of people are going to tend towards a small number of products that they trust are compliant, and there are a lot of other products that are properly compliant that need the verification. So we obviously need manufacturers to follow through on their promises and get their own letters, and then we're going to need those letters to be verified by a third party as well. It'll take a little bit of time, but we'll get there.
We focus on battery storage mostly, so the ones that are easiest to finance are the ones that have clear economics in a good location with a good off-taker and with ideally some line of sight on the tax credit. So the best ones are ones that maybe safe harbored their projects last year or earlier, so you don't have to worry about FEOC compliance, the foreign entity of concern, which typically means batteries coming out of China or with Chinese ownership, and that tends to add some complexity. The other way is to build or develop projects without ITC, without the investment tax credit. That's a big opportunity that developers and EPCs, I think, are starting to look at, because that means the projects are going to be essentially more straightforward, less paperwork, less risk. Although you're going to give up that tax credit, you can make up for it by getting lower costs of equipment if you haven't yet safe harbored, because that means you can use a FEOC battery from China or whatever the best quality and lowest price is, instead of having to do this procurement game of finding which one's going to meet the local domestic content and FEOC compliance requirements. So that's really what makes projects financeable and I think are most attractive for a project financier.